Hello everyone. Today we are going to do question number second. Here is the question. Sunny sold goods of rupees 52,000 to Vishnu Bhai on 16th June 2016, against which Vishnu Bhai accepted a 3 months bill of rupees 52,000 on 20 June 2016. On 2nd July 2016, Sunny discounted this bill with the bank at a discount of rupees 520. Vishnubai paid the bill on the maturity date. Past necessary journal entries in the books of both the parties. So here, as you can see that here drawer is Sunny. So for him, this instrument will be bills receivable, and Vishnu Bhai is the drawee or acceptor of the bill. So this instrument will be called as bills payable for him. So now let us pass. Before going further, let us understand what is discounting of bill. See, if the holder of the bill is in need of money before the maturity date, then the bill can be discounted with a bank or a shroff, or we can say that private party, before its maturity date, and money can be received immediately. Discounting of bill means taking amount against the bill from a bank or private party before the due date. The bank charges an amount for making payment against the bill, which is termed as discounting charges. The charges depend upon the rate of interest and the period of maturity. It must be borne in mind that discounting charges are calculated on the remaining period of the bill, that is, from the date of discounting till the due date. So here let us pass journal entry in the books of both the parties. So here first it is given that Sunny sold goods of rupees 52,000 to Vishnu Bhai. So in the books of Sunny, here first we will write date, that is 16th June 2016. Here we will pass the basic journal entry, and you can understand it with the help of golden rules that we have already studied. So according to that rule, here Vishnu Bhai account will be debited as he is the receiver of the good, and sales account will be credited as per the rule of real account, that is credit what goes out. And in narration, we will write being goods of rupees 52,000 sold on credit to Vishnu Bhai. On the same date, in the books of Vishnu Bhai, here first we will write date 16 June 2016. Here Vishnu Bhai is the purchaser. So here we will pass the journal entry for credit purchase. So here purchase account will be debited by rupees 52,000, and Sunny account will be credited as he is the giver of goods. So his account will be credited. So by 52,000. In narration, we will write being goods of rupees 52,000 purchased on credit from Sunny. Now let us see the next situation. Here it is given in the question that on 2nd July 2016, sorry, before that, it is given in the question that on 20 June 2016, Vishnu Bhai accepted a 3 months bill of rupees 52,000. So here this instrument is bills receivable or an asset for Sunny as he is the drawer of the bill, and we know that as per modern approach, when asset increases we need to debit it, and when asset decreases we need to credit it. On the contrary, when the liability increases we need to credit it, or when liability decreases we need to debit it. So here for Sunny, this instrument is bills receivable. So it is an asset as he is going to receive the money in future against this document. So here bills receivable account will be debited. Here new asset is created. So here bills receivable account will be debited by rupees 52,000 and Vishnu Bhai's account will be credited. Then on the same date in the books of Vishnu Bhai, here first we will write date 20 June 2016. Here this instrument is bills payable for Vishnu Bhai, that is kind of liability. New liability is created as Vishnu Bhai has accepted. For acceptor of the bill, it is a, a liability which is called bills payable. So here Sunny's account will be debited and being the liability, bills payable account will be credited. In the narration, we will write being bill of rupees 52,000 drawn by Sunny is accepted. Now further it is given that Sunny discounted this bill with bank at a discount of rupees 520. As I explained to you earlier that if the holder of the bill is in need of money before the maturity date, then the bill can be discounted with a bank before its maturity date and money can be received immediately. So same is the case here also. Here in such a case, the bank does not pay the entire amount of the bill but deducts an amount of discount from the total amount and pays the remaining amount. So here let us see accounting entry in the books of drawer, that is Sunny. Here first we will write date 2nd July 2016. Here as he is getting the money, so here bank account will be debited with the amount of the bill less discounting charges, that is 52,000 minus 520, that comes to 51,480, and discount account will be debited as discount amount is an income for a bank, whereas it is an expense for the holder of the bill. So being an expense for holder of the bill, that is Sunny, here in his book discount account will be debited by rupees 520, that is discounting charges charged by the bank, and bills receivable account will be credited with full amount of the bill, that is 52,000. In narration, we will write being bill of rupees 52,000 discounted with bank. Now in Roy's book, that is acceptor. Here, the acceptor does not pass any entry at the time of bill discounting by the drawer. He will pass an entry at the time of payment of the bill. So here in this case, we will write journal entry not to be returned, date 2nd July 2016, because this is a transaction between Sunny and his bank. Now, further it is given that Vishnu Bhai paid the bill on the maturity date. So here on this date, first here let us find out maturity date. Here this bill is drawn or accepted on 20 June 2016 and is payable 3 months after date. So the 3 months will end on 20 September 2016, and by adding 3 days, uh, 3 days of grace, the due date will be 23 September 2016. So here in the book of Sunny, that is drawer, there will be no entry. So we will write here journal entry not to be returned, date 23rd September 2016, because on the maturity date, the acceptor of the bill will pay the money to the bank, because drawer of the bill discounted this bill with a bank. So here we will write no entry. And in case of drawee, that is Vishnu Bhai, here first we will write date 23rd September 2016. Since Vishnu Bhai has paid the bill on the maturity date, so on this day, journal entry would be bills payable account debit, as bills payable was his liability. Now here against bills payable, Vishnu Bhai has paid the amount, so his liability will get reduced. So as per modern approach, when liability is reduced, then we need to debit it. So bills payable account will be debited by rupees 52,000, and as he has made payment against that, so here bank balance will decrease, so bank account will be credited by rupees 52,000. In narration we will write being paid rupees 52,000 to the holder of the bill on maturity date. So I hope it is clear to you all. That's all for today. Thank you very much.